Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 16th of August. All right, as we come into Thursday's trading now, just check out what's going on here across the majors. And I've purposely left my charts unadjusted because you can sort of see what's happening now. The Aussie had a bit of has had a nice little downtrend, but it's now trading sideways through the trend lines. Basically, there's nothing to really get traders stimulated to buy it or sell it at this point. We'll have a look in a second. Like the offshore yuan has definitely lost its impact. It's actually depreciated further, and the Aussie and Kiwi pretty much haven't moved much at all. The flightless bird, the Kiwi, sort of dipped yesterday, then once again sort of trading sideways. The story of the whole session is, check out dollar yen. I mean, we had a break to the top side, and I thought for all money it looked like it were going to continue higher. It's just breaking straight back down. They've seen all the yen crosses break down as well. So you think with that increased risk exposure, that's sort of, to me, what it's all about, would be in play, because we had particularly strong US numbers, retail sales figures. Now, they were offset by the industrial production numbers, and I'll show you those in a second, but it doesn't add up. And you look at euro. Now, we did break down through these previous lows here at 113.63. You can see it's sort of trading sideways through that trend line. And it does look like that 113.60 sort of level is creating some sort of pivot level at the moment. So we need to wait and see what comes about there. Sterling, well, the CPI numbers were as expected. You know, to me, it still means they're going to be raising rates next month. The data was a little bit mixed. We saw a climb sort of up towards just above 30. That was enough to get a lot of traders out before it nosedived and now back trading sideways. Dollar CAD, this is a good thing actually. Dollar CAD is starting to really come back into the groove with the correlation of oil now. Oil back to $64.50. You can see the green line there, and dollar CAD's going with it. It's good to see that correlation come back into play, because dollar CAD has been a bit of a nightmare to trade, especially with NAFTA hanging over the Canadian government, etc. So let's just have a look at these numbers now. In normal market conditions, now that we know the US fundamentals are strong, these retail sales figures, they tell you exactly what's going on. There's plenty of action. The issue was as well, there's a bit of a decent sized revision, I guess, which probably takes the edge off those top numbers. Then the industrial production numbers, once again, also, the revision was a little bit higher, but the core number there, the month-on-month number, lower. So on the face of it, the retail sales figures really strong. I would have still expected a bit of a stronger move, but that, as I said, was offset by the revisions. And that's why you've got to keep an eye on those numbers. They don't come out at the same time. They're a few minutes afterwards, and that's where the real flow can be. All right, so that gives you a bit of an idea of what's going on with the numbers. Now, if I just come back across and take you over to the sort of news page to see what's going through the market, it's more of the same, really. You know, we've got now we're talking about the offshore yuan slumping, and I'll show you that in a second. But look at these guys, Qatar and Turkey coming to each other's sort of assistance. Now, we expect Turkey to start to form some sort of alliance with everyone that hates the US. You know, Russia, Iran, anyone else. They'll sort of form some sort of allies themselves. Sterling, yeah, it's struggling. We know that. The Canadian dollar, oil starting to impact. But generally across the board, there's not a hell of a lot of talk about what's really going on. Obviously, Turkey is still a major focus on the news wires. I guess the news channels are still selling plenty of advertising there, so they're happy with that scenario. Now, come back into the US dollar. Now, even though we had, as I said, the US numbers, on the face of it, strong, but the revisions are a little bit weak. The dollar index is largely unchanged. Now, we do have a nice trend line here to work with, just around just above 96.60. That's worth really keeping a close eye on. Now, look at the offshore yuan, dollar yuan. So as this goes up, the yuan depreciates. Now, as that goes up, you'd expect Aussie and Kiwi to crash. The impact is now minimal, right? So if you're looking for that correlation, just bear in mind, if you do see the yuan take off either side, don't think it's going to just impact straight away on the Aussie and Kiwi. Equity markets, sea of red. Okay, that's the whole. This is where dollar yen is really coming into play. It's that negative risk sentiment, and that's where dollar yen has fallen down. We just had some trade numbers there out of Japan, really weak numbers. That'll definitely give the Nikkei something to think about on the downside. It should see dollar yen drift off a little bit further as well, right? And when you see the equity markets come off, what everyone's talking about is global growth, right? I mean, I think it's all rubbish because everyone should be concentrating on their own growth, but they're sort of saying, well, global growth could be disrupted. You know, Trump's started a snowball effect and this could run on forever. Well, you know what? I actually think it's a pretty good thing that a lot of these dead economies are flushed out. Particularly Japan needs to shake things up. China definitely have an unfair advantage with a lot of their structure, and that needs to change as well. All right, now, no need for me to get on my pulpit and give you that speech. Let's just have a look what's coming up. Now, we've got the geopolitics. It's still in the market somewhat, probably not as much as yesterday. I think we're coming back to pretty good conditions. I might actually update that after the video here. We're then coming in to look for the major numbers here. Now, we've got a pretty solid day. It's good to see the markets coming back to some sort of normality and back into the range. We've got fresh levels to look at. Aussie employment figures, right? Really important number for the Aussie. It should shape short-term direction for the Aussie dollar and the Aussie crosses, that's for sure. UK retail sales, well, we're looking for some sort of clear direction. Inflation numbers were high, so you'd expect retail sales to be still quite robust. It's not a given, but you will be sort of looking for that opportunity. As it is, sterling's just sitting in the middle of nowhere on its knees. So weak numbers, we should see it lower. We're going to need really strong numbers to see it higher. And now that dollar CAD is sort of still starting to chime in with the oil, keep an eye on the manufacturing numbers. Now, we've got oil falling, dollar CAD is rallying, okay? So once again, weak manufacturing numbers, probably the trade of choice at this early stage. And then obviously US building permits, probably one of the key numbers out of all the housing data because they need a permit before they actually start their housing approvals and all that sort of stuff. So it's a pretty important number, and that sets us up for Canadian CPI Friday. So bit of action today across all time zones, which is good to see. And yeah, that's pretty much it. You're just going to keep an eye on what's going through on the majors and really piece together the pairs that make sense and really have a look and focus on the pairs in particular where the economic numbers are coming out. Now, Aussie employment figures, obviously the Aussie dollar and Aussie crosses. You're looking for UK retail sales. Well, sterling will definitely be the firing line. And then when you come back to the US building permits, well, then all the majors are going to be in line. But the key part today, you've got a little bit of homework to do, and that's really adjusting these trend lines. Now, that trend line here in the Aussie, now it's trading sideways, is pretty defunct. Okay, that just comes from that high level to the current market. You're better off at that point just focusing on the highs there because there's no real core resistance. If anything, you're looking for where it's actually had a bit of traction. And if anything, it hasn't been above 73.20, and that's 100 points higher. So we've got plenty of room to move on the top side should those Aussie employment numbers be strong. And it's pretty much the same situation here on Kiwi. You're probably looking at these sort of levels. I mean, that trend line there is pretty crap. It's so weak. But you're just going through the process of updating your charts, finding out where the key levels are, and then trying to work out where the best trading opportunities are. All right, and that's all we're doing. We're just following the market. Let the market sort of decide which pairs to trade, which ones not to. We've got some good trend lines here on a number of these pairs, and all we're doing is going through the process of, well, not really elimination, but just making sure we know where the levels are and where to hit the market when these data releases come out. All right, guys, that's it from me. We'll see you in the trade zone. All the best today. Cheerio.